There are two clear schools of thought on analysing the stock market. They are technical analysis and fundamental analysis. In this video, I will give you a basic introduction to the elements of fundamental analysis. Fundamental analysis evaluates a security and attempts to measure its intrinsic value by examining related economic, financial, and other factors. The end goal of performing fundamental analysis is to produce a value that an investor can compare with a security's current price, with the aim of figuring out if a security is underpriced or overpriced. A trader or investor will then decide what sort of position to take, that is, to buy or sell. Some of the many indicators used by fundamental analysts include dividend yield, stock price history, balance sheets, profit and loss statements, auditors' reports, annual reports, sales growth, earnings, management ratios, market performance ratios, capital structure ratios, ability to pay dividends, etc., etc. When analysing a stock, futures contract, or currency using fundamental analysis, there are two basic approaches one can use: bottom-up analysis and top-down analysis. The top-down investor starts with global economics, including economic indicators such as GDP growth rates, inflation, interest rates, etc. He then narrows his search down to regional and industry analysis of total sales, price levels, effects of competing products, and more, and only then he narrows his search to the best business in that area. The bottom-up investor, conversely, starts with the specific businesses, regardless of their industry or region. It is important to understand there are also limitations to this type of research and analysis. There is a massive information available for economic and company statistics, which can be overwhelming, and so the investor must limit themselves to a small number of companies within a limited number of sectors or industries. Without experience in the relative sector, it can be difficult for the private investor to judge the validity of projections provided by companies. Access to company management to discuss their strategies, capabilities, and experience is afforded to institutional investors through their research analysts, but not to the individual investor. And lastly, significant effort goes into producing company data. Hence, much of the data is several months old by the time it becomes available to the public. As you can see, fundamental analysis, whilst popular with investors, is a complex method that requires much more information than I can provide in a few-minute video. If you are looking to use fundamental analysis to assist you in your investment decisions, you will need to educate yourself further on areas such as how to read company reports and the details of the various aspects such as ratio analysis. For now, this has hopefully given you a basic understanding of fundamental analysis.